Okay, so if you're a trader, you know this feeling, right? You spot what looks like a perfect RSI signal, you jump into a trade, and boom, it immediately turns against you. It's incredibly frustrating. But what if the problem isn't the RSI itself, but how you're using it? In this explainer, we're going to break down a strategy that adds a powerful confirmation layer to your RSI signals, helping you filter out those frustrating false starts for good. So let's just get right into it. Why does this happen so often? You see the RSI cross a key level, like 60. You think, this is it, time to buy. And the market just does the exact opposite. It's a really common and frankly expensive experience that makes a lot of traders wonder if the indicator is even reliable at all. Well, here's the thing. The problem usually isn't the RSI. The problem is using it all by itself in a vacuum. The missing piece of the puzzle, the key that really unlocks its power, is price action. And that's just a fancy way of saying we need to pay attention to the story the chart is telling us through its support and resistance levels. Price action provides the context that turns a simple indicator signal from a wild guess into a genuinely high probability setup. So here's our game plan. First, we're going to expose the hidden flaw in how most people look at the RSI. Then, we'll build out a super clear, step-by-step playbook for both buy setups and sell setups. After that, we'll cover the crucial mental rules you need to trade this system effectively. And finally, we'll wrap it all up into a powerful framework you can start using right away. All right, first things first, let's really dig into the core issue of relying on just one signal. Think of it like this. It's like trying to drive a car looking only at the speedometer. You know you've got momentum, sure, but you have absolutely no idea if you're about to drive straight into a brick wall. So here's the classic trap. The RSI line pushes up above 60 and everything screams strong upward momentum. You think, okay, this is my signal, and you hit the buy button. But what you didn't see was that the price was heading directly into a major resistance level, a price ceiling where a ton of sellers were just waiting. The price slams into that wall, reverses hard, and you're stopped out for a loss. Sound familiar? And that right there, that's the whole point. An RSI signal without confirmation from what the price is actually doing at these key levels, well, it isn't a strategy. It's just a guess. It's a coin flip, and you can't build a consistent trading career on coin flips. But what happens when we combine them? Well, that's when everything changes. The RSI is what signals the potential for a move, but the price action, the actual break of a key level, that provides the proof. And this is how we shift our mindset from making a guess to executing a calculated, high-probability strategy. All right, let's get into the good stuff. We're going to build our first actionable plan. This is the simple two-step confirmation process for spotting a high-quality long trade or a buy setup. The rules are super simple and clear, which is what we want. First, we're looking for that burst of momentum. For us, that means the RSI has to cross above the 60 level. But and this is the most important part, we don't act yet. We wait patiently for step 2. We need to see the price itself confirm that momentum by breaking and closing above a key resistance level. Both things have to happen. And you can see it right here on the chart. Look at how these two events line up. The RSI crossing above 60 was our alert. It was the heads up that bullish momentum was building. But the actual trigger, the green light for the trade, is that strong candle closing above the resistance line. That's the market itself, confirming that the buyers are now in control.
Okay, so the signal is confirmed. How do we actually manage the trade? It's simple. Your entry is on the close of that breakout candle. Your stop loss, your safety net, goes just below that resistance line you just broke, because it should now act as a new floor of support. And this is crucial. We only take trades where our potential profit is at least twice as big as our potential loss. We're always looking for that 1 to 2 risk-to-reward ratio.
Okay, so we've got the plan for buying. Now let's just flip the script and talk about shorting, or profiting from a downward move. We just invert the logic. This is our step-by-step guide for a high-probability short trade. And you guessed it, it's the exact same two-step logic, just in reverse. First, we're looking for signs of weakening momentum. For us, that happens when the RSI drops below the 40 level. Step 2 is our confirmation. We need to see the price itself break down and close below a key support level. The floor has to give way. And just look at this example. It's crystal clear. The RSI drops below 40, which puts us on high alert that sellers are gaining power. We wait. We do nothing. Then we get that firm candle close below the support level. That's our dual confirmation. The indicator and the price are now telling the same story. signaling a really solid short setup. The execution here just mirrors the long setup. You enter on the close of that breakdown candle. Your stop loss goes just above that broken support level, which should now act as a new ceiling or resistance. And as always, we are disciplined with our risk. We only take the trade if we can realistically target a 1-to-2 risk-reward ratio, or even better.
Okay, so we have the what to do, we have the technical rules, but honestly, that's only half the battle. A perfect strategy is completely useless if you don't have the mental discipline to actually follow it. This next part is all about the psychology, and it's just as important as the charts.
This is such a powerful piece of trading wisdom. What this really means is you should never, ever feel like you have to take a trade. If that perfect two-step confirmation isn't staring you in the face on the chart you're looking at, just close it. Move on. There are literally thousands of other stocks and assets out there. Don't get emotionally attached to one setup. Get attached to your discipline process. All right, let's bring it all home. We've taken a very common indicator, we've pinpointed its biggest weakness, and we've paired it with simple price action to create a really robust and logical trading framework. Let's lock in these key rules. Number 1, never ever trust an RSI signal by itself. It's a clue, not a command. Number 2, for a long trade, you need both pieces, RSI above 60 plus a break of resistance. Number 3, for a short trade, it's the mirror image, RSI below 40 plus a break of support. Number 4 is non-negotiable. Always protect your capital with a stop loss. And finally, number 5, trade smart. Only get into setups where your potential reward is at least double your risk. And that really is the big question, isn't it? This strategy is simple, but that doesn't mean it's easy. Because look, knowing the rules is only half the battle. The real secret to winning in the long run isn't just knowing the rules. It's having the ironclad discipline to sit on your hands and do nothing until the market gives you one of these A+ setups. The knowledge is yours now. The discipline, well, that's up to you.